It's about that time of day again. My name is Joseph. Monday evening, March the 5th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Starting off tonight on oil, crude is bullish and trying to finish the measured move target, but we're getting a little too close to some major resistance overhead, so my plan is to wait for buying opportunities using the hidden channel tomorrow morning. The S&P is also bullish with a triple measured move to finish today's session, and that tells me to look for a two-legged pullback before buying more tomorrow morning. Nasdaq also bullish tonight, and the strength of this move higher gives me only one real reliable option, and that is to connect those highs, drag down to those lows, and grab that hidden channel for tomorrow morning. Gold is bearish with a very slow and sluggish spike in channel, but nonetheless, that tells me to look for selling opportunities with a two-legged pullback up above the swings on that spike in channel on gold. And then wrapping up tonight on the euro is bullish with a spike in channel pattern, and that tells me to wait for buying opportunities down near the low of the range tomorrow. I got a great newsletter for Tuesday's session. Got a great video in store for you guys and gals tonight. Plenty of reliable trading opportunities setting up for Tuesday. We got some big news this week. We got a big week ahead of us here, this second full week of the month of March. And of course, as always, I've got a great strategy waiting for Tuesday's session. Before I jump in though, I do want to remind you, if you're watching on YouTube, you can find a detailed description of this strategy on my blog at Sideways Markets. I'll leave the link in the description of the video on YouTube. If you have any questions about anything covered in this video, please remember to post them in the comment section below. And if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon so you get notified every time I post another video. And if you really want to stay in tune with everything going on here at School of Trade, head over here to sidewaysmarkets.com, jump over to our trading blog, right, and check out where all the action is. Again, I'll put all the links in the description of the YouTube video. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Lower left-hand corner, make sure you follow me for exclusive content you won't find anywhere else. I'm always posting important links, charts, and updates throughout the week on my social media channels. And speaking of charts, how easy is this? The only place to grab these is on the blog at Sideways Markets. The link is in the description of that YouTube video. Follow that link and grab those charts, have them ready on your computer for tomorrow. And then speaking of tomorrow, what are you waiting for? Grab that free pass. Upper right-hand corner, grab that free pass. Come join me as a guest in the trade room tomorrow, right, and see what all the commotion is about. And don't forget, any questions, we got live support on the right-hand side of the website. And don't forget, you can always hit me up right in the comment section below the video. Let's keep rolling. Let's keep rolling. What's tomorrow's plan look like? Well, first of all, tomorrow is Tuesday, March the 6th. What's the news schedule look like here for tomorrow? It's pretty empty, as you can see, right? Kind of wide open here tomorrow. Not a lot on the calendar, right? We got some Fed speak going on. We got some factory orders tomorrow. But in all reality, I think most people are going to be looking at news events later on in the week here. You know, we got the beige book later on in the week, right? 2 o'clock on Wednesday. Not much on Thursday. Thursday we'll have that ECB announcement early in the overnight session. And then, of course, we got the employment number on Friday. It's also daylight savings time coming at the end of this week, so we may start seeing a little bit of adjustment for that. Tough to tell right this far ahead of it. But as you can see, tomorrow, no major news tomorrow on the calendar. That means really our big milestones tomorrow are going to be 8:20 is the opening bell right on the currencies, 9 o'clock opening bell on the crude, 9:30 opening bell on the E-minis. You got your 10 o'clock shock, you got your 11 o'clock transition right into lunch, and then of course the closing bell for electronic markets at 5 o'clock Eastern time. So 8:20, 9 o'clock, 9:30, 10 o'clock, 11 o'clock. I have a strategy in our trade room to make sure we trade basically around these times, right, making sure we wait for those opening bells. We'll talk more about that tomorrow in the trade room. But other than that, though, there's really not a lot on the calendar here for tomorrow to worry about tomorrow. And again, tomorrow, again, wide open tomorrow, but as we go into Wednesday, get the beige book, right? Not a lot on Thursday for the U.S. traders, but again, get the the ECB announcement on Thursday morning, and then of course the big enchilada, the big kahuna, right, for the week is the non-farm number on Friday, right? It's usually the first Friday of the month. I'm still surprised they didn't give it to us last Friday, but that'll be kicked down to the road here, right down the road to Friday, March the 9th. So not a lot for tomorrow. One more thing I do want to keep an eye on too. We are watching rollover on the E-minis. It'll probably be sometime on Thursday or Friday. So you'll see me reminding you guys this week about contract rollover. So make sure you mark your calendars for that. And again, we got daylight savings this weekend. So definitely in the U.S., we're excited about that because, of course, we get some daylight at the end of our day now. All right, looking good. Enough of that. So no major news for tomorrow. Don't forget, we open up our trade room every morning, 8 o'clock Eastern time, and I am really excited to see you there with me here tomorrow morning, and we're going to execute this strategy together with all of our members in the trade room. Starting off tonight on oil, we'll go oil, then over to the E-minis. From the E-minis, we'll go to the gold, right? We'll wrap up on the euro tonight. Starting off tonight on the black gold, the Texas T, the crude oil futures. Yeah, they're bullish. They're trying to finish a large measured move target for tomorrow, but you can see the short-term price action doesn't look too convincing. A couple dojis up there. It doesn't look like buyers are too eager to keep buying high into the close here. So not too convincing this close to that major level of resistance. So my plan for tomorrow is to connect the highs, drag it down to that low, and then wait patiently for a pullback to the low of this hidden channel, as we call them, right, which combines perfectly with that battle zone tomorrow morning. Couple things you want to keep in mind on this chart for tomorrow. We're obviously bullish. Right, we were bullish as of Friday afternoon, right? Strong move up, continuing higher here. That creates this measured move. We have reason to believe that measured move is the big target here for the buyers, at least in the short term. And then, of course, with that, right, we take off those lows, connect those lows up to those highs. And this gives us an idea of where the low of that channel is, right? So that channel obviously is an area of interest for us to be a buyer tomorrow. Combine that with a beautiful example of what we call a naked reversal line. This would be, of course, a prior high that can be used as a swing low, right? Prior high that can be used as a low there, right? So that will be a great level of support there for tomorrow. So measured move, channel, reversal line. I've got this little prior swing right there marked up at 21. That creates the battle zone. But really all I'm looking for right now is I'd like to see us pull back so we can buy low. You know, we saw this big run up here. Why didn't they finish off the measured move? You know, you would think they'd have no problem kind of sliding up into that measured move. So clearly buyers are growing weary up here, right, about this area of resistance. And you can definitely see why. It was a relatively, if you recall, right, it was a relatively kind of low volume, kind of slide higher today, kind of a melt up, if you will, which kind of mimicked the E-minis, which we saw as well. So what's the plan here for tomorrow? Well, the bulls have control, so I want to be a buyer, right? We won't want to be a seller until the bears take control here, which we'll talk about in a moment. I want to buy a pullback. I want to buy a pullback at a level of support, right? So let's play that game. What if price goes up? What if price goes down, right? What if price goes sideways? I'd like to see this thing go lower here. And we have a bit of a trend line here right now, and you can look at that kind of as a two-legged pullback, right? So think of it this way. We pull back off that high, trend line gets hit, into the failure off the moving average, failure back above, and then buy that pull back in, right? So there's three real opportunities here. One is going to come off of that trend line. Two is going to be off of that failure. And of course, three, right, is going to be that pullback to the moving average, right? So two-legged pullback into the battle zone, right, buying at support. Sellers fail at the moving average, right? We assume that sellers are going to try to sell, right, that pullback to the moving average. If they fail, this becomes a great buying opportunity now for the bulls. And then, of course, the final one, right, is going to be that pullback before we go back up and retest the high. So that would obviously be kind of my dream come true scenario tomorrow. I'll take any one of those three patterns depending on what we get, right? You can see a very good example of something similar to this, right? Went down, back to the moving average. They try to hold the pullback. They fail. pull back, right, and go, right? We see that all the time, right, when a market turns bullish. And you'll notice how they got some traps below those prior swings, right? So that's kind of the same thing, right? Kind of the same thing we're looking for here for tomorrow, right? Want to see us down, up, failure, right, spike, and then grab that pullback, right, going higher. Now, we may end up going sideways here. It's easy. It doesn't take a lot of energy to kind of look at this and say, yeah, this could be a sideways range, right? Maybe it ends up being a triangle, right? That could be it right there, a little triangle action. It's a little bit tough to tell, right? The bottom line, though, is if we do go sideways, whether it's a triangle or whether it's a range like this, right, you always want to start thinking about buying low, right? Buying below that range low. So one try, two try, and then back up in, right? One try, two try, right? And then back up into that range. Use that two try rule. Again, a really good example right here, right? So we go down, one try, two try, and then back up into that, right? Back up to retest the high. What if price goes higher? You know, what if we come out tomorrow and we're seeing this thing just continue here, right, to grind higher here? It's not, you know, hopefully it doesn't happen, but it might happen. So what if it happen? What if we get it tomorrow? Well, then you want to start thinking about traps. Because at that point, we're going to be, I don't want to say that we're due for a pullback, but there'll be a lot of buyers that'll be waiting patiently for that pullback. So wait for that trap, and then we'll look to be a buyer right underneath that, right underneath those traps, underneath those swings. It'll be almost identical to what we saw here, right, coming out of Friday's session, right? There was that kind of grinding motion higher. Look for that trap, get back below that low, and then blast right back to retest the high. That'll be almost identical to what we're looking for here, right? It'll be almost identical to what we're looking for there, right? Get that deep dip, right? Buy that pullback, and then bam, right back up, right, to retest the high. Last but not least, how do we turn bearish? Yeah, how do we turn bearish? Three things we need, right? Strength, first thing. Second thing, pull back to the moving average. Third, right, strength going down, right? Strength, pullback, strength. We saw a great example of this towards the end of the session on Friday, right? If you recall, the bears had control, right, for most of the session on Friday. But then what happens? Strong move up, pull back, and once we see buyers right there, you know, no doubt in your mind now, this is a bull market, right? Not a bear market any longer, right? Mark up those two highs, and then you know you're buying that next pullback, right? So you're going to have to wait a little bit, right, to really get proof that these bears have control. But if we can get that strong move down, hold that pullback, and get another leg lower on strength, then we can go out, we can connect these lows, bring it up to that high, right, and give the bears a chance, right, to run this price lower as well, right? So you're not going to be able to, well, you can if you want to, but they're a lot lower reliability. The problem is if you try to predict reversals, a lot of times what happens is when you get this strong move down, a lot of times it pulls back to that moving average. It doesn't hold on strength. It ends up failing, goes right back up, right, to retest that high, right? So that's why you can't rely on that first pullback. You've got to wait, right? You got to wait for that pullback to fail. We'll talk a lot more about those kind of reversal strategies in our intermediate and advanced classes, but that's definitely the plan for the bears there tomorrow. From the crude oil, now over to the Emini. The S&P is bullish with a triple measured move to finish today's session. And with the strength of this move higher, it's easy to connect the highs and look for a hidden channel for reliable buying opportunities tomorrow morning. Combine that hidden channel with that prior 96 reversal line, and you get a great place to look for some buying opportunities here tomorrow morning. This was an interesting chart here tonight. There's a lot in this chart right now. I think the most important thing to keep in mind is we're obviously bullish. And I'm sure a lot of folks here, right, would look at this and say, well, you know, it's a bull spike in channel. And I definitely think that's the case, right? Short term, definitely seeing a bit of a bull spike in channel, right? We saw an example of that on crude oil earlier on. If that's the case, then we know that we're looking for a pullback, right, back to some of these prior swings, right? So if we're seeing, right, if we have this If we have this strong bull spike and channel, right, no problem. I want to buy a pullback, right, get a little trap low below those swings. We're going to see a great example of a spike and channel on gold, right, a little bit later on in this video. So the S&P definitely has potential, and I wouldn't argue with you, right, if you said, no, this is just a spike and channel, that's all it is. I think you're absolutely right about that. Spike and channel looks great, and anytime we have a spike and channel, we always look for those traps down below those swings, because anytime you have a spike in channel, everybody's already in long, right? The big blast higher, that gets a lot of folks in long. First pullback, people are buying. Second pullback, we haven't trapped low yet, right? Everyone's still in long. Third pullback, right? We haven't run out any of these stops, right? A lot of trailing stops are sitting down here, and they haven't been run out. What I want to do is I want to force those buyers to get back into the market by running them out and forcing them now to chase this thing back up to retest the high. That's why that's the most reliable trade on a spike and channel. Everyone's already in long. The only way this price keeps going higher without a pullback is if we get some external stimulus, a news event, a political announcement, natural disaster, right? Fed speaker pumping up the dollar or killing the dollar, right? For this to go higher, things like that, right, would cause us to go higher. But even if it does keep going higher, we're still going to be waiting, right, for that deep pullback, because we know that will be the most reliable way to do it. So that's a big clue here, that spike in channel. So automatically, we already know those two lows right there at 08 half, 06, 07, right? That's going to be a really popular area there for buyers here tomorrow. At the same time here, there's a lot to be said, though, about the kind of the confluence here. If we line up these highs, right, you'll notice this midline really looks convincing right in the middle, right? You'll notice that middle is convincing, and then you'll notice it lines up beautifully off of these lows. So I guess the dream come true scenario, kind of the home run scenario tomorrow, will be a really deep pullback all the way to the low of that kind of hidden channel, as we call them, right? Because you really can't draw the channel any other way. You can't really draw it like that, right? That doesn't seem to make any sense. You've got to draw it off the highs. You can't draw it off the lows. And when you draw it off the highs, it really fits nicely there. So we know that's going to be a level of support, right, waiting for tomorrow. And then, of course, the third thing here, we got that reversal line. I'm not sure if we're going to pull back all the way to that reversal line. It's a pretty deep pullback, obviously. It'd be a pretty steep pullback all the way to that reversal line. But, it is there. It definitely marks the bottom of that battle zone. It's right around that big round number. So maybe we do get a pullback to the big round number and then get that bounce off that reversal line tomorrow. We'll see. We'll see. Right now we know we got that hidden channel, right? So that might be all we get, right? We got that spike in channel, right? That might be all we get, right? A little trap low below there, right? So these are all, right? These are all relatively easy clues here for tomorrow. And then again, I mentioned this earlier, but we got a measured move, kind of a weird measured move, right? It goes up one leg, two legs, right? Two legs, and if you grab it here and go up from there, right? There's your third leg, and you'll notice that's exactly where they decided to call it quits here for today, and you see they kind of bounced off it twice there without closing above it. I have to assume that's what they were looking for. There really isn't anything else to work with as far as a symmetrical move here, so I'll have to assume that's what we're going to use. Traders are human beings, and human beings, just like any, just like any other creature, they're going to use whatever they get their hands on, and it looks like that measured move was all they pretty much had to kind of sink their teeth into today. So spike and channel, hidden channel, measured move, right? Reversal line. This is very similar to the plan on oil, right? If we pull back, I love to see a nice two-legged pullback, right? Get that moving average to come over, right? Two-legged pullback off the trend line, failure at the moving average, blast higher into a pullback, right? And of course, these three, right? 1, 2, and 3. It all really depends on if we get the pattern tomorrow, so we'll keep an eye on that. What if price goes sideways here? What if we do end up going back up to retest the high, but we don't go through the high, right? We go back to retest the high, we pull off, right? And tomorrow morning we come in and we see this right? Kind of double tops, right? We're not making new higher highs here. Then what? Now this becomes a spike in range, which we'll see in a moment on the euro. Spike in range patterns, like any other range, I want a 2-try rule, 1 try, 2 try, let those bears try twice, and then look to buy in a bull market, right? Using that as a failure. The key is that when you try to break out of a range, historically, most breakouts fail, right? These are liquid markets, not to be confused with penny stocks and crypto markets, and those are illiquid markets, right? Dangerous amounts of volatility because there just aren't enough buyers for every seller, and they can break out, right? They definitely can. So if you're trading those really dangerous, right, illiquid markets, I wouldn't recommend it, but if you are in more of a gambler type market, like an illiquid cryptocurrency or penny stock or low float stock environment, right, then yeah, you can kind of gamble, but just don't put too much money at risk because it is a gamble. In liquid markets, though, breakouts aren't going to be very successful. They're going to fail. And so rather than trying to predict which breakout will be successful, the odds are much better if we just don't worry about predicting the successful breakouts and just look for the failed breakouts, right? There's a much higher number of those than there are successful breakouts. So again, I'm looking for that 1 try, right? 2 try. Let them really give it a try. Let them try to break this thing out. And then again, look for those failures, right, below the moving average and back up right into that range here for tomorrow. Now, what if price keeps going higher? If price keeps going higher, this basically continues here, right, with a spike in channel, right? So if it continues with a spike in channel, right, we know to look left, find some of those prior swings, really stay patient, get that pullback below those prior swings, right, and look to buy off that high. It's one of those simple rules, right? In a bull market, buy at support, right? Don't buy at resistance. So as the market goes higher, I know it's very tempting to want to buy high, but it's very, very important that we don't. It's important we buy at support. If we're serious about our long-term career, getting in the right habit of buying at support is really the most important thing right now. Get you doing the right habits, right? Because that will benefit you into the long term. Let's keep going. One more E-mini. Now over to Nasdaq. Nasdaq, obviously, it is also bullish after a late session short covering rally from last week's pullback. You remember what happened last week? We had of course our Fed chairman, Jerome Powell, right? He talked up the dollar last week, early in the week, and that, of course, brought everything lower. And now they're kind of rebounding here from end of last week, right, into the early part of this week. So we're obviously bullish, right? We talked about a short covering rally last week in the newsletter. This move higher pushed through all the available resistance levels, telling me that the only real reliable option at this point is to connect these highs, right, and look for that hidden channel. I've got that 33.5, right? That looks a lot better on this chart than it did on the S&P. That 33.5 reversal line looks a whole lot better on the Nasdaq. That is definitely doable here for tomorrow. So we're looking forward to buying a pullback here on the way up to that measured move. Now, speaking of that measured move, let's zoom out a little bit further on this. Yeah, there we go, right? And that's kind of the only thing we have to work with here. That strong move up, right? Pullback is really, as you can see, it's very, very choppy here, right? You had that bull channel, right? They broke, retested, got right? Couldn't really get through those highs here. They kept pulling back, finally broke through those highs now, right? So now we can assume we have price acceptance, and we can just kind of assume they're going to that, right, to that measured move. At this point, these highs really stand out here. So I'm going to mark up those highs, right? I thought about bringing them a little bit tighter like that, but honestly, I think this fits a lot better down at that low. So I'm going to stick with that as my channel. You could really look at this though, almost like a larger, right? Again, kind of like a larger channel there where you could bring that down, right? And again, that's where a lot of buyers are going to be waiting here, for tomorrow or maybe even the next day, right? We don't really know enough yet, right? Combine that with this reversal line, and boy, oh boy, does this little area right there become a very attractive location to trick some sellers, because as it pulls back, sellers will likely confuse this on a faster time frame. I talked about the scalper's curse on my newsletter a few weeks ago, and we talk about why it's not a good idea to use those real fast time frames, because if you're on a real fast time frame, when you pull back to that low, this will look very bearish, right? If you were on, say, example, a 144 or a 233 tick chart, you have no idea what the big picture looks like, and so you'll be convinced we're bearish and end up getting run over like something like this, right? So imagine that coming in for tomorrow, pulling back off that high and then blasting back up, right, to retest that high. So that's gonna, right, that'll definitely be an objective here for us, right, for tomorrow. So now you know kind of the big picture of that channel, right, kind of where my mind's at on that channel. We get a little bit of falling resistance here, right? So again, two-legged pullback off of the right trend line, or maybe we get lucky, maybe it drops right down into that right battle zone, back to that moving average, right? And then of course, jump back up, pull back and go, right? So obviously these two patterns, right? I'm not going to try to pick the bottom on that. I'll wait for it to fail off the moving average, or wait for it, right, to jump back above the moving average, then buy that pullback, right, for the move back up. And again, the objective then at that point, right, is that measured move. What if we go sideways here? Yep, this is going to sound like a broken record at this point, right? We go sideways. Obviously, we want to be a buyer. It's not bearish yet, right? So one try, two try, and then back up we go. One try, two try, and then back up we go. Again, we teach this strategy in our intermediate and advanced classes. It's called the two-try rule. And of course, if we go higher, right? If we go higher here, then all of a sudden we start running into that measured move, right? If we do happen to find ourselves into that measured move, right, we always know anytime we get to a measured move, usually what happens is we see a two-legged pullback back to a level of support, and then a retest of that high. So that will be the plan. If we go up to that measured move, we'll look for that two-legged pullback, buy that dip, get down to a level of support there, like a prior swing or like a trend line coming off of that low, and then up, right, to finish off that measured move target here for tomorrow. How do we turn bearish? Strength, pullback, strength. Don't forget, right, got to get that strong move down, pull back to the moving average, and another strong leg lower, right? You're going to really want to see it explode away from the moving average, just like we saw with the buyers going higher, right? Here's a good example. Notice when the market pulled back earlier this morning. Notice how tight the price action is to the moving average. Okay, now look right and look at how far away from the moving average the price action got when the price is going higher. Okay, the point is that when the market's trending, it jumps off the moving average, right? When a market is pulling back, it just kind of grinds off that moving average, right? It doesn't get very far away from it. Okay, you'll notice that will be a big clue. I'm going to keep a little bit of the secret to myself for our clients here at School of Trade, but that's a general way in which you can use the moving average to spot reversals, or more importantly, to spot a failed reversal, right? A failure opportunity down below that moving average, right? When the buyers, again, this is a bull market at that point, when you see that we're not getting that explosive move away from that moving average, right, you know this is not a reversal, right? And this takes some practice, it definitely does, but what I always tell my clients is that when a market reverses, you're going to know it, because it's going to expand, it's going to explode, right? When a market reverses, if we see this thing go down, hit that moving average in reverse, it's not going to walk its way lower. It's going to explode lower, right? You won't have any problem seeing that reversal, right? Now, obviously, if you're trying to predict the reversal, good luck, right? But I'm not in the prediction business, right? I'm in the consistent, reliable profit business, right? That's what I want. I don't want predictions. I don't want to get lucky. Surprises are for birthday parties. I want smooth and steady, right? So wait for that reversal, right? Then look for that sell off of that high. You're right. You're right. You're going to miss out on some profit, but you're going to dramatically increase your winning ratios. And when you increase your winning ratios, you increase your confidence. And when you increase your confidence, you trade better. And when you trade better, you make more money. And guess what? When you make more money, you're probably going to keep following those rules, which will mean it's going to be easier for you to stay disciplined and patient for the best trades, right? That's the key to success when it comes to being a trader. Do the little things correctly that increases winning percentages. When you increase the winning percentages, you're more confident. Confidence leads to patience and discipline, and that leads to more profit. More profit leads to more patience, and it keeps fueling, right, that kind of that profitable cycle, right? That high probability, reliable, confident cycle, right? That really turns new traders into amazing professional traders. And I've seen it happen time and time again in my trade room with brand new traders, right? Never taken a trade before in their entire life. And they come in, they learn the basics, they learn the good habits, right? It's those good habits, and that's, right? Those good habits breed success. The success breeds more good habits, right? And it's just that kind of cycle, right, you go on that's very difficult to get off, right? You can build good habits or you can build bad habits, right? I'd rather build good habits because they're going to pay for, right? They're going to pay for all the things you want in the future with those good habits. Let's keep going. How about some gold? Gold is bearish with a spike in channel pattern, which tells me that most sellers are already in this move going lower, and the only way to really attract more sellers into the market will be a correction up above prior levels of resistance. My plan for tomorrow is to wait for exactly that. Wait for a two-legged pullback up into levels of resistance overhead with the goal of selling back down to retest the low and try to hold a small portion, right, as a runner down to that measured move. Now, it's also worth mentioning that gold was very slow on its way lower this morning. Not sure if you guys are watching gold this morning, but it was a real sleeper. This is a real slow market pulling back, which could be a big personality clue that the larger spike in channel is more important right now. If it is, we'll see extreme strength going higher and look to buy that pullback rather than fading it back down to that low. Now, there's two main components here right now. I'm going to bring it all together in a moment. The first one is we get this strong move down. The bears hold the pullback. We make that lower low. I'm connecting those lows. I'm bringing it up to those highs, and I'm looking to sell, right, up off of that high, right? Sell up off of that high, or because we're testing the high of that channel literally at midnight for the markets right now, I'm going to look to get up around this battle zone, right? So I want to be a seller up around the highs. Too late to be doing that right now. So I'm looking for a chance to sell up around that battle zone, right? 1, 2, and then sell back down. Okay, that's the first spike in channel. But I'll tell you, a big clue right now is just how lazy this market was today, right? Very slow on the move lower. Now, let me just zoom out real quickly here, right? I'm not a huge fan of using multi-day information. It's got to be pretty convincing, and this is pretty convincing, right? This looks like, what does that look like? Yeah, a spike in channel, right? And what do we know about spike in channels? They love those deep pullbacks. You got it. Back to prior swings. So look where we are right now, coming off of that prior swing. So what does that tell you here, right? What does that tell you? This could be nothing more, right, than a pullback off that high and a retest, right, for tomorrow. So here are the two scenarios, right? One scenario obviously is a bear scenario. The other scenario is a bull scenario. Now, honestly, right now, my gut tells me we're going back to retest that high. Right? My gut says this is just a pullback in that larger spike in channel. We're going back to retest the high. The problem is my gut instincts, they don't really have the best track record. They really don't, right? I tend to think, right, with my mind instead of thinking, right, from my trading plan, right? Now, right now, what do we know? What do we know for sure? Okay, we know the bears took control, that strong move down, they held the pullback, and they're going lower. So as of right now, I'm going to keep my opinion of this market to myself and wait for proof. Proof is the only tradable, right? The only tradable piece of information. So what I want to see right now is basically one of two scenarios. For a sell, I want to go up, fail, back down, right, and sell that pullback, right? Two opportunities here to be a seller on gold. Both of them require me to go up, right, get up off of this low, get up, try to get some sellers up there, those highs, back down below the moving average, and then, of course, got my big runner, right, for that measured move tomorrow morning, right? So that's the sell, right? That's the sell plan for tomorrow, right? If price jumps, though, and this is why I said earlier, right, it's going to be obvious. I'm going to watch this, right? If this thing jumps, right, I mean, if we see this thing really jump higher here, we know what's happening. Now, two-legged pullback. At the same time, I'm going to mark up that high, bring up that high like that, right? Grab that hidden channel. Very similar to what we saw on Friday, right? If you watched last Thursday night's newsletter, very similar to what we saw on Friday, right? And then get that move up, right, to retest the high. So a lot of this is going to have to do with what the personality does in the short term, right? Does it kind of mosey its way higher, pull back to the moving average, right? And then kind of sink back down? Or do we jump higher, right? We jump higher, that'll be your clue of what's going on. Find those, right? Find that reversal or that hidden channel, right? And look to buy that pullback. And again, the target will be at that point going back up, right, to retest that high. All right, there is potential here, maybe a range for tomorrow also, right? So now you know kind of the ideal scenarios. If we do see price kind of sink back down to that low, if we see the price sink back down to that low, it's going to really do a lot of damage to the confidence in the buyers, right? So if this market does sink back down to retest that low again, it's going to let a lot of air out of the balloon for the buyers, right? The buyers need this thing to jump off of this low if they're going to be able to really recruit a lot of people to help them out getting back up to that high and really intimidate the sellers from standing in their way. So what I want to see is, right, if we do go lower here, then we have a trading range, 1, 2 to try rule, right? And we're selling above the top of that range, right? It'll be a bear bias. I want to sell above the top, right, of that range. If we see the market roll lower here, right? If it just rolls lower here and keeps going lower, you know, the plan pretty much stays the same. We're still going to watch those swings, right? We're still looking for that trap high, right? Failure, strength, pull back down, right? Trap, failure, strength, pull back down. It's the same plan as always. It's just we'll have to wait a little bit longer for it tomorrow if it doesn't give us a shot here, right, to sell up around those highs. The measured move makes for an easy target going lower. All we can do right now is find that entry trigger. And again, as I mentioned earlier, this, again, it kind of smells like a reversal here. I just need to wait for more proof. Now, speaking of lots of proof here, speaking of proof, right? Yeah, Euro is bullish with a spike and range pattern. Possibly a spike in channel if the buyers can show us a little more proof here tonight, right? Speaking of proof, that's the big concern on this chart right now. The bulls got a perfect opportunity to buy that pullback at the beginning of today's session, but they clearly failed to make new highs. In other words, we have rejection at the highs rather than acceptance through those highs. This tells me buyers are definitely in control. However, they are clearly not interested in buying new highs right now. So my plan is pretty simple. Focus on buying as low as possible, such as down at that prior swing low or down the low, right, of this range. As you can see here, bulls definitely took that price higher Thursday into Friday, right? We come out this morning. Beautiful example of a short-term spike in channel. Right, you can see a little short-term spike in channel. What do all spike in channels tell us to do? Yep, look left, find some prior swings, buy that dip, right, and back up to retest the high. They go back up to retest the high, and what happened? Nothing. Well, profit taking, right? Buyers are not buying those highs, you can tell, right? Buyers aren't eagerly buying on the way going higher. You can easily see it, right? The buyers aren't looking for new highs right now. They clearly took all their profit off at that high. So now we have a scenario where we have a strong move up, two-legged pullback, and a retest of that high, right? What does that look like? It looks like a spike and range. Spike up, pull back, retest the high. We don't go through the high, right? We kind of double top off that high. Mark up the high, mark up the low. That becomes a spike and range. You guys are experts on spike and range patterns, right? If you're not, go to my YouTube channel or my blog and type in spike and range, and you'll easily find that last video tutorial. A spike and range pattern says two things. One would be a failure down below that low, or two would be what we call a fake out, breakout, pullback up near the high, right? It looks like that, right? So you get the failure down at that low, or what we call that fake out, breakout, pullback up towards that high, right? Get that moving average up above that range high, two-legged pullback, use the high of that range support, use the use the moving average as support, right? And look to grab that pullback as it goes higher, right? So those are the two main components for a spike in range. So at this point right now, right, there's kind of your spike in range right there, up, down, up, back down again, right, up to the high of that range, or, right, up, get that moving average through. All we got to worry about is getting that moving average up above that high, because clearly they didn't get it the first time around, and then we got that measured move waiting, right? Measured move, pretty obvious. I would assume that's going to be your measured move up there, so that'll be the plan for the target, right? And then don't forget, if we get to that measured move tomorrow morning, two-legged pullback and do it again, right? It usually bounces off those measured moves, and we'll do it again from there. All right, so right now I'm looking at this as a spike and range pattern. There is potential here tomorrow. You'll notice if you mark up these lows, bring it up to that high, that does look pretty convincing. So let's watch carefully tomorrow, right? We may see this thing up, right, then back down again. So just kind of keep in mind, right? You know, for example, if we see it jump up, but the moving average never gets above that high, right? So if we go up and kind of bounce off it, now you know. Right? Now you know it's actually a spike in channel, failure, strength, pullback, right, and back up from there. That'll be our plan to buy off that low tomorrow. All right, guys? Boy, look at the time here. 40 minutes into this, and it went by so fast. So now you got a good plan on the euro, right? Euro looking good here for that, again, spike in range, spike in channel, right? Where's my gold? Where's my gold? There's my gold, right? Gold has that spike in channel. Is it going to be a bull spiking channel or a bear spiking channel? Right now, all we really know is the bear spiking channel. Over on the Nasdaq, hidden channel on the Nasdaq. Looking at the S&P, hidden channel on the S&P. Both of them kind of have these little kind of embedded spiking channels here. And then again, you got that oil, right? Oil trying to get that pullback as well. So lots of hidden channels, some spiking channels, some measured moves, and lots of learning and earning opportunities tomorrow. And don't forget, if you want to learn the trading strategy, I'll put all the links, by the way, in the description of the YouTube video. If you want to learn this trading strategy, I go over all the basic fundamentals in my free trial. Grab that free trial on the homepage at schooloftrade.com. Learn more about it. I'll send you an invite to come out and test drive the trade room as well as a guest. Don't forget our beginner, intermediate, or advanced levels of membership, right? The beginner course will help you lay a good foundation. The intermediate course, right, will build up all the scaffolding, right? All the important technicals, and then the advanced course will wrap it all together with strategy. You can learn more by watching the video on our homepage. And then don't forget, if you have any questions, drop those questions in the comment section below the video on YouTube, or I'm always here to help. Hit me up on live support. I look forward to seeing you guys right on our live support, and I'll give you guys answers to all your questions there. As always, back tomorrow morning, 8 o'clock Eastern time in our trade room. If I don't see you guys there tomorrow morning, have a fantastic Tuesday session. Watch those levels of resistance overhead. Buy those dips, sell those rips, and I'll see you guys back here same time, same place, right, tomorrow night on our nightly newsletter. In the meantime, as always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos.